Put the kids to sleep. Take the phone off the hook and ignore that email that just came in. Because as you watch the short 15-minute wealth report that I must tell you won't be online for long, I'll open your eyes to a hidden, almost secret market that can multiply your money 425%, 566%, even 1,150%. And it's important you know something right up front. I'm not about to tell you about a big-ticket trading course. I'm not going to ask you for a monthly subscription to an overhyped investment newsletter. And I'd never insult your time with some magic piece of trading software that'll make you a gazillionaire overnight. No, what I'm sharing with you today is a world away from all the usual nonsense. And most important of all, it's something ordinary investors, people just like you, are using to lock down triple-digit returns on their money. Returns like 136%, 362%, and 425%. Huge gains that almost force you to rub your eyes to believe they're actually real. The best part? If you've started off with very limited capital, even as little as $200 in seed money, you can do this. If stock market jargon makes your head hurt, no problem. You can do this. Heck, even if you've never even traded a baseball card before, I'm 100% sure you can do this. Because as I'll prove, although the last decade has been a multi-trillion-dollar bloodbath for ordinary investors, others have escaped without a scratch. With my help, they've ridden a hidden, almost secret market to the fastest gains anywhere in the financial universe. And now it's your turn to join them. In fact, very soon I'm going to show you a real-life example of how with zero trading experience and almost no risk, $1,000, true chump change in investing terms, can, in 5 simple steps, turn into a golden parachute worth an amazing, $5.7 million, or $5,736,354 to be more exact. And I'll promise you now, it won't sound so unbelievable in a moment, because you'll soon see how every penny of potential profit can be traced back to Wall Street's best-kept secret. Penny stocks. Bought and sold for less than $5 a share, these fast-gaining stocks trade on well-known exchanges like the NASDAQ and the New York Stock Exchange. But let's not dance around the bad press these stocks receive. You've probably heard that penny stocks can be richly lucrative investments, but that they're also notoriously risky. Well, I can confirm something for you right now. The vast majority of penny stocks are risky. In fact, I'll happily go further than that. After grinding the numbers on thousands of penny stocks over the years, I'll shout it from the rooftops. About 97.32% of penny stocks are trash. They're worse than just bad investments. They're radioactive to your prospects of growing old without money worries. But here's why you should scoot to the edge of your chair and pay attention to the rest of this short video. Not all penny stocks are duds. Far from it. About 2.68% are the titans of tomorrow. Small, innovative companies who are about to careen up the stock market growth chart. Hi, this is Nathan Gold, the penny stock egghead. And as my loyal subscriber family knows so well, penny stocks that survive the proprietary gauntlet of analytical obstacles I throw in their path can quickly accelerate in value 362%. And when I say quickly, I mean it. You can sometimes watch them spike in price in as little as 14 days. Yes, only 2 weeks. You might not get that kind of return from a household name blue chip stock if you held it for 2 decades. And I know that unless you're someone like me who follows the markets almost 24/7, this next stat is going to blow your mind. You might know about the decade-long implosion of the S&P 500, the index that tracks the performance of expensive blue chip stocks like Coca-Cola Company and eBay. It's advertised by Wall Street as the ordinary investor's best friend, but instead, it's become their retirement killer. Right in front of their eyes, it's pulverized a mind-boggling $9.6 trillion of investor wealth into worthless rubble. Yes, that's trillion with a T. And if that's not bad enough, let me really put this lost decade into disturbing perspective. On average, if you invested in this S&P debacle, you watched each of your hard-earned dollars shrink, all the way down to 79 cents. That's more than just a dream-crushing negative return on your money. That's grand larceny. But as many Americans have fallen victim to this stock market robbery, others have found it easy to protect and grow their money, locking in gains of 136%, 400%, even 425%. Their success may have blown the minds of their friends and family, but the reality is, these ordinary Americans shocked themselves. Because it's safe to say, many started out intimidated by the mere thought of trading a stock, only to discover that it's much simpler than Wall Street insiders want you to know. How simple? As simple as making a short phone call or clicking your mouse a few times on a website. And because they took action, these everyday Americans have become the unexpected winners in the race to wealth. Their prize? Instant investment income, and a growing nest egg that can support every wish they have for their family's future. Every single wish. It's not going too far to say, those who wisely invest in high-quality penny stocks have every right to ask, what recession? And here's why. Since April 2000, the value of the S&P 600, the index that tracks small-cap penny stock companies, has roared up 117%. Remember that in the very same time span, pricey household name stocks destroyed $9.6 trillion of hard-won wealth. Yet, unknown to most investors, as the rest of our economy tanked, these overlooked penny dynamos hung tough, dishing out returns of 362%, 566%, and 1,150%. The best part is, this is nothing new. Jaw-dropping profits have been secretly flowing from penny stocks for decades. Tom Gardner, an investing historian, states that small-cap stocks have substantially outperformed the overall market over the past 40 years. That's right, these under-the-radar stocks that sell for less than $5 a share, and often for literally pennies, have been the most explosive investments in any portfolio since back in the good old days. Back when gas was only 36 cents a gallon, and a visit to the Exxon didn't feel like a mugging. But I know what you're asking yourself. Since these dirt-cheap stocks can soar in value so fast, why don't I hear about them on CNBC or Fox Business? That's a great question with an easy answer. Penny stocks remain a hidden and almost secret wealth creator for one important reason. They're simply too small for the big investment banks to trade. See, in theory, investment banks could buy hundreds of millions of penny stock shares at once. However, if they did, they'd come up against an insurmountable problem. Their big order would skyrocket the share price, stealing their potential profits. So, because bloated profits aren't on the table, the big bankers simply don't show up. That's why they're always wallflowers at this almost secret profit party. What's more, since the financial media are in the pockets of the big banks, they don't point their cameras at penny stocks, however eye-popping their returns. It's no wonder so few people know about penny stocks, or take advantage of their dizzying climbs in price. And you know what? It's actually better this way, because it lets us monopolize these almost secret stocks for ourselves. You know, let's back up for 1 second. I want you to really imagine this. I mean, really go there in your head. How different would life be today if you'd got in early on a Goliath like Walmart when it was a little-known upstart? What about Cisco? Microsoft? Dell? You know how life turned out for early investors in these Wall Street darlings. They live high off the hog, financially set for the rest of their lives, but only because they got in quick and early. They acted before the investing masses jumped on, shooting the share price from dirt cheap to downright extortion. Now, these high-priced old hands have seen their best days when it comes to handing investors explosive paydays. Penny stocks, on the other hand, have math firmly on their side when it comes to banking lightning-fast gains. For example, say a penny stock rises 20 cents, from 3 cents a share to 23 cents a share. What seems like a small 20-cent gain in price is actually a giant 666% gain, and enough to turn a $1,000 stake into $7,666. You could find a way to spend that, right? Now, on the other hand, let's say you invest in a blue-chip stock. A single share could easily cost you as much as $350, and in some cases, much more. Only this time, using the same example of a 20-cent increase in price, you don't make out like any type of bandit. You make out more like a beggar. Because although a 20-cent price increase rocketed your penny stock holdings from $1,000 to $7,666, it doesn't do the same for your blue chip stock. It only turns the same $1,000 stake into $1,000.57. Yes, you're a pathetic 57 cents richer. That's not going to put the kids through college. Really, you'd make more money holding out a plastic cup on a street corner. And whether it's Apple, Walmart, or any other company in the dusty blue chip brigade, odds are none of them are going to see their stock rocket by 362% like one of my picks achieved in a matter of only 14 pulse-pounding days. This little engine that could was overlooked, undervalued, and almost totally undiscovered, even by me. It found its way into my subscribers' hands because it gutted out every analytical test of strength I threw in its path. See, it was among the rare breed of penny stocks that ace what my subscribers fondly call Gold's Gauntlet. The proprietary numbers grinder I insist every penny stock survive before it even becomes a candidate for intense review. Now you're probably starting to see why my subscribers have given me my egghead moniker. I'm a card-carrying numbers nerd. For me, the stock market, in all its complex numeric beauty, is the baddest math puzzle on the planet. And most importantly for you, it's an ever-changing puzzle I wake up each morning determined to solve. In fact, you might even say we've already met. Yep, I'm that dorky guy in school you used to sneak answers off of during brain-frying calculus exams. Only now things have changed. Now you can ethically steal all my investing answers without visiting the principal's office. And what I want to share with you now is something pretty extraordinary. Because right now, I want to show you how $1,000 turns into $5.7 million, and in just 5 simple steps. But before we see how this amazing trade wave plays out, let's address what you and I are both thinking. Is this a likely scenario? In just 5 simple steps, should you or any other investor hope to turn $1,000 into $5.7 million? And the answer to my eyes is clear. Absolutely not. The chance of stringing these trades together, then snowballing every dollar of profit forward, well,